Hello and welcome to the FreightFA brief. Today we're going to be talking about the shakeups happening in the LTL world over the past 4 to 5 months because I think they paint a compelling picture of what's to come in the LTL market. We had a few things happen. If we back up, one of the first things that happened was FedEx Freight announcing that it was going to spin off into its own standalone LTL publicly traded company. After that, we had the Supreme Court ruling that changed liability for brokers and carrier together and who can be sued. And then shortly after that, we had Amazon rolling out its own LTL. I personally think that this is creating a new heavyweight bracket. So let's dive into it and examine FedEx first, because they just completely spun off FedEx Freight into an independent, publicly traded LTL pure play, and it's trading under the ticker FDXF. Now, FedEx distributed about 80% of FedEx Freight shares to FedEx stockholders, explicitly framing this as a value creation move and a way to give the LTL business its own capital structure and strategy. Now, if you read that next to Amazon's move, Amazon has expanded its LTL offering from inbound-only freight into Amazon's facilities to a broader network where shippers can move 1 to 6 pallets between their own sites, third-party warehouses, and retail locations. It's positioned under Amazon's broader supply chain services umbrella that we spoke about last month. It has tech-heavy features like real-time tracking, integrated portals, and shared equipment pools with their truckload operations. So on one side, you now have a standalone FedEx LTL champion whose job is to maximize LTL value. And on the other, Amazon ramping a for-hire LTL network that can lean on parcel and FTL density. The center of gravity for LTL is shifting towards large branded platforms, and these platforms can carry the CapEx for tech, equipment, and terminals. They can monetize network density across modes, and they can sell integrated supply chain stack to the mid-market and enterprise shippers. And that's really the backdrop for everything else. Now let's layer in the Supreme Court broker decision, where liability just got real, and the world looks even less friendly to the long tail of small, loosely governed operations. In that case, the court held unanimously that negligent hiring claims against brokers are not broadly preempted when they fall under the statute's safety exception. In plain English, if a broker puts a sketchy carrier on a load and something goes wrong, plaintiffs can pursue the broker in the state court under ordinary negligence standards. Legal analysts are already flagging a few likely outcomes. One is higher broker insurance costs and tighter underwriting criteria. Another is more conservative carrier vetting, especially around safety scores and compliance history. And the last point ties directly to your concern. The riskier part of the carrier universe just got harder to access if you're a broker who doesn't want to be on Exhibit A. Now, the regulation doesn't stop there. Earlier this year, there was a crackdown on ELDs. FMCSA is tightening oversight of which electronic logging devices are allowed on a certified list, which will push non-compliant or low-quality ELDs out of the market and force some carriers into upgrades or, quite frankly, out of service. At the same time, the government has ramped enforcement of English language proficiency standards, with thousands of drivers projected to be sidelined for failing that bar. Analysts are already warning that that's going to reduce the pool of qualified drivers, particularly among immigrant and small carrier segments. It's going to create lower effective trucking capacity and increase tender rejections. It will put upward pressure on national truckload rates as capacity tightens at the margin. So you can start to see the signs of 2026 take shape. Capacity is slowly coming out via small carrier bankruptcies, enforcement actions, and regulatory friction, even while headline tender acceptance looks decent. So yes, supply is leaving the market, but not in a dramatic cliff. More like a steady leak around the edges. When you put it all together, you start to see what's coming next, especially if you stitch the Amazon LTL story, the FedEx Freight spinoff, and the Supreme Court liability all together with the regulatory squeezes. This will effectively lead to some pretty clear second order effects, including a shift towards big, clean, and data rich networks. Large branded carriers and platforms like FedEx Freight and Amazon are structurally better positioned to handle compliance, safety, and documentation at scale. Brokers, shippers, and insurers will increasingly favor carriers with robust safety records, clean ELD setups, and strong documentation because the legal risk of going cheap just went up. Higher barriers to entry for small carriers and informal brokers. There will be tightened ELD and English language enforcement. That's going to raise the operating and compliance bar for even new and marginal carriers. So, when the next real demand pulse arrives, shippers will find fewer, cheap, and loose options and more aggressive pricing power from the well capitalized networks still standing. The brokers that survive and thrive will be the ones that invest in data, vetting, and scenario modeling, not just headcount. You can expect more partnerships where mid-market brokers lean on large carrier platforms for line haul while differentiating on customer service, price intelligence, and risk management. So don't be surprised if the FedEx Freight spinoff starts to resemble a standalone platform story, something like a pure play LTL network that can partner with brokers, shippers, and even digital forwarders in more flexible ways than when it sat inside of FedEx's mothership. At the same time, Amazon will keep adding adjacent services, making its LTL offering one more lever in an integrated supply chain stack rather than a siloed service. Thanks for tuning into our show. If you liked it, feel free to share with a colleague. Also, remember to subscribe to the FreightFA Brief on Substack, and you can listen to this podcast on Apple, Spotify, and YouTube. And last, don't forget to check out FreightFA.com, where you can get live market intelligence and up-to-date rate estimates 24 hours a day. Until next time, this has been your Freight Flow Advisor Brief.